Hello everyone, and welcome to a new series of videos that David and I are going to be holding on volume price analysis, which those of you who follow this channel will know is our method of analysing a chart using that very special relationship between the price action and volume. And it's explained in my book, A Complete Guide to Volume Price Analysis. In this session, we're actually going to be focusing on stocks, two in particular, Nvidia, obviously, because that is the stock of the moment, but also looking at Apple because there have been some very interesting VPA setups on Apple today. But before we start, as always, can I draw your attention to the disclaimer that I know you can see on your screen? As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Before we move to the Nvidia chart and then on to David to look at Apple, I just want to cover, let's have a look, what's happened today with regard to the releases, because as you know, obviously the price action on the chart, it always takes account of what is happening in terms of the fundamental news, what the Fed is doing. Next week we have the FOMC, and today has been particularly important because we have had the CPI. Obviously, the main market narrative is if and when the Fed is looking to reduce interest rates. And one of the metrics that they look at is the CPI. It's not their preferred metric. That's actually the PCE. And as we can see here, and I'm using the economic calendar from Trading Economics because I find it's a little bit more detailed than most of the calendars that are out there. The one that we suggest new traders start with is something like Forex Factory, which I know it's got Forex in the title, but it actually covers, it's also applicable to the stock market. And you may be surprised to see that the CPI data actually came in either on target or very slightly as a very slightly more. For example, the inflation rate came in at 3.2, whereas the previous was 3.1, and the month-on-month also came in slightly ahead of expectation, but the market went up. And you often see this. You often see data that it doesn't look particularly good, and yet the market reacts positively, whereas sometimes it comes in badly and the market goes up. And you say, well, why has that happened today? And the reason is it's because of this one, the core inflation rate, which is year on year. And Jay Powell has said that, yes, the PCE is their preferred metric, but they are also paying attention to what is known as the core inflation rate. And year on year, that has come in slightly lower than expected at 3.8 instead of 3.9, which actually tells us that inflation may be easing. Now, you could say, well, if inflation is easing, why this rush to cut rates? It is simply one metric. You have to also keep in mind that with releases, with statements, with a fundamental data, market will always pick. They always look for data that supports the current narrative, and the current narrative is that the markets really don't want to fall. Now, we did have a bit of a swoon on Friday, particularly for Nvidia, which is one of the reasons why I've highlighted it in this session. But just bear in mind that when we look at our chart and we're looking at the price action and we're looking at the volume and we're looking for those signals and we are looking for those setups, we do have to bear in mind what is going on the releases, which releases are coming up, and just make sure that we have them somewhere, we have them written down somewhere, because they can reverse a price, and then the trend will then continue on, as it were. So that's what I wanted to say with regard to Nvidia. This was actually the little post I did on Nvidia, really after this dramatic fall that we have here, that we can say here. What I basically said was, to be honest, in the run up, Nvidia was marching on higher. It's put on a tremendous rally that we have here from the volume point of control. We can see the volume coming in. It was at the volume point of control. That's what we want to see, because this is the beginning of this rally, and it's also the breakaway from a very, very long period of congestion, which we can actually see better on the weekly chart. And if we look then, it was about $500. And all the talk last week was, well, when is it going to get to $1,000? This is only January this year. This has been an extraordinary run in anybody's book. It's just really, I think, unprecedented. But of course, when you have a day like you see here, where you have this big candle, this big bearish engulfing candle on big volume, everybody wants to know the reason why. Well, has it come completely out of the blue, as it were, or everyone's looking for a different reason? And there's been speculation about it. Was it to do with the options? Was it to do with this? Was it? And the conclusion sometimes is given the extent of this rally, it's profit taking. It's coming to such a big number. We haven't had a decent correction. And in fact, given what's happened today, I believe this is the market reaction, because when it does happen, and these things do happen, we then have to look at what happens next. Now, this is Friday's candle. Bearish engulfing candles are very strong candles when you see it, especially on the slower time frames, and accompanied by high volume, which we see here. But it's what happens next, and what happens over the next 2 to 3 sessions. What's happened with Nvidia is yesterday we had this little doji candle again on high volume. And what that is, yesterday, that was an anomaly, because given the amount of volume there, we would have expected that candle to be much deeper, but it wasn't. But was it ready to reverse? It's the first signal, and this is what we have to bear in mind with volume price analysis. We see a signal, but we always have to be a little bit patient and wait for maybe a third candle, sometimes even a fourth candle. Nvidia being Nvidia, and today's not terrible news on the CPI, what has actually happened is we have had an up candle with good volume, and what it's actually created, you could say that we are seeing this very typical reversal pattern, that we see this 3 candle reversal. And what makes it more perhaps slightly stronger is the range of this candle, in as much that it is closed above 50% of the range of the big down candle. And that is considered a bullish setup, simply from a candle pattern perspective. But what we always want with any candle or any candle pattern is we want to see that the volume is also supportive of the move, either higher or lower. Now, there is another factor that we have to bring in to the price action that we're seeing with Nvidia, is that on Friday it is the quarterly expiries. Now, those of you who watch this channel will know the impact that the zero DTE options are having on the markets overall. But obviously Friday, it's the quarterly, so it's a big expiration a day. I think it's also rollover in the futures market. So it's a week where markets would expect to be more volatile. And in fact, I read on my X feed that there are a lot of traders who have placed either bought calls or sold puts at the 900 strike with Friday's expiry. And that also would explain the volume that we are seeing at the moment. But if you're not into options, I would strongly suggest that you keep a close eye on what is happening in the options market, particularly with a stock like Nvidia and any of the big tech stocks, any of the stocks that are traded very heavily on a daily basis, because the option market and the stock market are very intimately connected. And it is something that we cover in great detail in our stock trading and investing program. Years ago, when David and I started, the option market was really a backwater. It was there for hedging purposes. Most people didn't understand it. It was very it was mysterious, but it's just something that happened in background. Not so today, and there's even research which is now saying that what is happening in the options market is actually driving the price action in the stock market, particularly with stocks such as Nvidia, such as Apple. Tesla is a classic one, but Tesla's crown, if you like, as the most heavily traded stock, has certainly been taken over by Nvidia. And my last point about Nvidia is, in case those of you may not know, is that it also benefits from the Nancy Pelosi effect. Nancy Pelosi, American politician, who is probably one of the greatest options trader that has ever walked this earth. She has this massive position in Nvidia. It's closely tracked by a number of specialist websites who track the trading that is carried on by members of Congress. And you just Google Nancy Pelosi option trader, and you'll find out what she, and I believe it's actually through her husband that actually does it, why Nvidia is also attracting a lot of attention. And that's without the bubble, in inverted commas, that we have in AI. But from a VPA perspective, what we're seeing at the moment, we're seeing a very nice reversal on the daily chart. These three candles, and it's good that we are seeing positive. It's supported by good volume, because one of the concepts of volume price analysis is we like to see this relationship. It has to be in balance. If you have a wide-ranging candle, you want to see that supported with good volume. If you have a wide-ranging candle on low volume, then that's a red flag. It's what we call an anomaly, and our antennae have to be on alert. Doesn't mean the price won't carry on higher, but it's telling us that it's not right. So that's what I wanted to say about Nvidia, and I just wanted to focus on the daily chart because of this particular pattern that we see here. I think for Nvidia, it's still looking for that $1,000 mark, as it were. But at the moment, as I said, very much we have the options market to consider as well. 900 seems to be a very popular strike price, and you also confirms how markets do like round numbers, and by round numbers I mean numbers ending in 0 and in 5. Can I pass over to you now, David? Right. So that's my contribution. I will now pass over to David. And what I'd like to say, if you have any questions on anything you hear in this video, do put them down in the comment section, or you can drop me an email, anna@annacouling.com, and we can cover them in perhaps the next video that we do.
Hi, everybody. Thanks very much indeed, Darling. And as promised, we're on the 1 minute chart for Apple. And the reason I've gone down, we've gone from the dailies on Nvidia. And one of the things I also want to reinforce about the options market, and Anna's touched on it. Can I say that in the last 5 years, the relationship between stocks and options has changed dramatically. And it has changed to such an extent, really, I guess post COVID was really the most significant change, and that change is so significant. I'm not going to go into great detail here because, as Anna said, it's covered in huge detail in the stock program. And the reason is that the tail is now wagging the dog. In other words, the options market is so important. It is so key to understanding why stocks move in the way they do, why they hit resistance levels, why they hit support levels. And it is a steep learning curve, but it is one that I would urge you to consider, because if you understand the Greeks, if you understand the structure of the options market, if you understand how the options market works, particularly in the relationship between dealers, how options are bought and sold, and how they are hedged by the dealers who make a market, the market makers who operate in much the same way as in the stock market. They are um, there to make a market so that when you want to buy or sell an option, they are in the marketplace. But they are in the marketplace in a very different way, and that way is in terms of hedging. But as I say, I'm not going to go into it now because it is a complex subject. It's one that you do need to understand, but it is covered in great detail in the stock program. Um, the reason I've gone to the 1 minute chart for Apple, this is from Apple today, earlier on in the session, and this is a very, very simple, it's a great chart because it's got 3 or 4 lessons in one. And as Anna mentioned at the top of the show, that I'm looking here at reversals, and in particular, one of the simplicities and one of the great attractions of using the volume price methodology is that it is very easy to spot. We as individuals have a great natural ability to spot anomalies, to spot things that are out of context or just out of balance, out of kilter, whatever. And even more so when you're looking at a volume profile. So our eye is immediately drawn to those areas where the volume bars are very tall or where they are relatively low or very low. Those are the areas of the histogram that I'm always looking for. I'm always looking for those extremes, if you like, those extreme highs and extreme lows. And we've got 3 or 4 examples here. We'll ignore that one over there for the time being. That really the 3 I wanted to concentrate on are this one, here, and here, because they do demonstrate the basic concept, the basic idea of volume price analysis, which is enshrined in Wyckoff's third law, which is price and volume being in agreement. So what we are constantly looking for is an answer to that question. We look at a single candle, we look at a single volume bar, and we consider it as to whether the two are in agreement. Now, if we take the first example here, we've got rising volume as we come into this period here. And with that, we've also got rising price, which is fine. By the way, on the back here, I've got the MVWAP. I'm not going to go into that in great detail because I just really want to concentrate on the volume lessons here, the very, very straightforward VPA 101, if you like. So we have volume rising here, which is what we want to see. We want to see volume rising in a rising market. So when a market is rising, whether it's in the 1 minute or the 1 day or whatever it is, we want to see that volume rising, which is what we have here. We do. Then we have these 3 volume bars, which are more or less the same height. On the second one, we could say we've got a very widespread candle, but the volume has actually fallen away from the first one. So in a way, it's giving us a signal that perhaps the buying support is waning a little bit, but it's really on the next candle, this third one here, that we see we have a narrow spread, a relatively narrow spread when compared with the previous candle, and yet the volume is a little bit higher. Now, what is that actually telling us? What it's telling us is that there is more effort going in here, there's more volume going in, and yet the result that we're seeing up here in terms of our candle is less. In other words, the market makers are forcing this market higher, but they're forcing it into a market which is resistant to a higher price. Because all things being equal, what we should have seen with this candle where my cursor is, it should have been at least twice that height if we consider the previous candle to be volume and price in agreement. And there's no reason to think that that is not the case. So in other words, in this very simple example, this is our benchmark. We're saying, okay, yeah, volume and price looks okay on that one. We've got a nice widespread up candle. We've got good volume under it as well. And now we come to the next one, the follow-on candle, which is more or less half that width, and yet we've had an increase in volume. That is an initial signal that of potential weakness. It doesn't tell us immediately that something's about to happen, but it's just a red flag, if you will like. It's a warning signal that volume and price are not in an agreement. We've got some disagreement here. We've got an anomaly. We then get the next candle, which really confirms it for us. We've got this little upthrust candle, nice wick to the upper body, very narrow body to it, and we've got lots of volume. It happens to have closed here on a red bar or red body, if you like, a down candle on the body. Equally, it could have been green. The color of the body is not really significant. What is significant is the fact that we've got a nice big wick to the upper body. But more importantly, we've also seen that weakness coming in earlier with the previous candle. And really, it's those two signals which give us a confirmation signal that perhaps we are looking at a potential reversal here. And that's what we start to see unfolding. We get a nice widespread candle. So we've got a nice 3-candle arrangement here with a little upthrust at the top. And we've got 2 candles either side. So this is already starting to look like a decent opportunity. And then down we come. Now, what's interesting about the move lower here is as we move down this price waterfall, the volume here is falling. Now that, again, is an anomaly. If we want to see a market that's falling strongly, then we should see rising volume. And it gives us a clue that for the time being, this move is not going to go too far. And it doesn't, because we've got falling volume under it. We go into congestion phase. In this case, the volume does indeed pick up again, and we carry on to the downside. Whether we would have waited through here or not, who knows? But it gives us, again, it's volume price analysis giving us a heads up as to why is the market slowing? Why is it moving into a congestion phase? Well, we can see the reason why, because the volume here under the downwards price move is falling. And that's what we expect to see. Therefore, we're not anticipating that the market is going to crash. We're not surprised when we see the market move into this congestion phase with the associated volume. We may or may sit through that, depends on our risk tolerance. In this case, it would have paid off and we go off to the downside. And then we come to our next anomaly. And clearly, it's a signal that's hard to miss. What have we got here? We've got a nice, really nice deep wick to the lower body of this candle. And we've got a ton of volume coming in. In fact, almost the highest volume of this particular phase of price action. Why is it anomalous? It's anomalous because if this were to be a widespread down candle, then it should have finished down here somewhere and not. It's closed back up here. What's that telling us? It's telling us there is a ton of buying coming in here, a lot of buying coming into the market by the market makers. They're coming in to buy. So the market's fallen down here to the low of the session and then closed back up here. Appreciate this is a 1-minute time frame, but the principles are exactly the same. And then off we go to the upside, and we get this really nice rally all the way through here, moving through the VWAP itself and on into the upper envelope, and on up we go all the way up to the top. Again, you may or may not have held through all there. There's lots of other little lessons in here as we move into congestion phases. You've got volume falling away, and then we get a volume pickup again as the market starts to rally. Obviously, support and resistance is a key plank of volume price analysis. Again, I'm not going to go into that in great detail here, but if we break through a resistance area as was building here, that's positive. We want to see rising volume. We've got rising volume here. We've got nice spreads. We've got increasing spreads here, which is always encouraging to see. and then this little reversal. There's no great selling pressure under there, so it's no surprise to see this inject a further leg of momentum up in the trend. We then get to the third anomaly that I wanted to point out here, and again, I think this is the highest volume that we've got here. Nice, really, really big, wide bar, but look at the price action associated. And this really brings us to the whole idea of benchmarking, because what we're doing in volume price analysis methodology constantly is we are looking for benchmarks. We are looking at a phase of price action where we can compare like with like, because this is a 1 minute chart, so we don't have to worry about session crossovers or anything like that. So we can look at a candle and an associated volume bar with it, and we can say, okay, yeah, if that's our benchmark candle, then clearly this must be anomalous because we've got a ton of volume coming in here, and yet the price action here has only gone up this far, and yet we've had other candles over here where the price action has moved less dramatically, and yet we only have this amount of movement on the price action, and yet we've got this amount of volume. We therefore should expect this candle to be much taller, and it isn't. So again, this is a very similar example of where we have a lot of effort going into that candle, but the price action does not reflect the amount of effort that's being delivered in there. And therefore, it's no surprise we get some nice confirmation signals that this is potentially moving into a reversal point. We get a doji, lots of volume going in there, so indecision. Then we get an upthrust, another one here confirming it, and then we start to see the rally developing to the downside. So 3 very simple examples there. You will see these in all time frames, but I thought it was a nice one to pick off today. It was one I was watching at the time. I was on the 1 minute chart for Apple, and I thought this would make a really nice lesson to bolt on to Nvidia, which is at the other end of the extreme. But it makes the point that volume price analysis can be applied to any chart, any time frame, and it doesn't matter. It's learning the principles of VPA and then bolting it into all the other elements, and supported, of course, by the various indicators as well. So that's really where I wanted to pause on that one. Oh, sorry, let's just pop that back up full size. There we go. Just drop that down there. And really just to wrap up this particular video, which will be going up shortly, this is where you can find all the details on the education program. This is the stock program, which we launched recently in the last couple of months, been hugely popular, and we have many students on that now already. I won't bore you with all the details here, but it is extremely comprehensive. And just to restate, one of the big elements of this is really the whole business of options, understanding the Greeks, understanding implied volatility and the importance of implied volatility and how it relates to options pricing, and how that is then reflected in terms of the stock price and how it behaves and the individual stocks. So that's where you find that all at Quantum Trading Education. This is where you'll find all the indicators at quantumtrading.com. And finally, on Anna's site, this is where you will find all the books. And can I just say, over the last 3 or 4 months, we've done a huge amount of work on the books. You will find a lot of them in color now. The VPA book is in full color. Moreover, what we've also done is we have taken all the images, we have converted them to high res. We've also taken out all the black backgrounds and made them white, so they are hugely readable now on really any device. And as I say, we've also converted them all to color, and that applies to the complete range of books, whether it's the VPA book, the stock trading book, Forex, they're all in color in various versions. And we've also uploaded them in hardcover as well. So not only are they in paperback, black and white, and paperback in color, they're also in hardcover as well. And some of them are also in hardcover color, I think, the VPA book. In addition to that, we've also expanded out into other channels. So you will find them on Apple. You will find them on Google Play. You will find them on Kobo. And we're also rolling them out in other places as well. So you will find them in many different places. So if Amazon isn't your cup of tea, you will find them in other places also. So thanks for watching. Hope you've enjoyed this particular video. We will see you again soon, and bye for now.